Hi there, welcome to kneppyinvests. Time for another portfolio and technical update. Hopefully this video is going to be a little bit quicker than my usual ones because I actually am on my lunch break for work, working from home today. So typically in this video, we look at the performance of my three portfolios. I won't talk about the makeup and strategies I'm using in these portfolios. However, the long-term portfolio compared to the benchmark is actually negative now. So a little bit worse than the benchmark. And when I compare the different or the performance of the different, suppose you say, shares within each market or indice, so we are talking about the ASX, New York Stock Exchange, Nasdaq, and a few international exchanges. The best performing exchange for my portfolio is actually the Nasdaq, followed closely by the ASX. And then coming in the rear, we have the New York Stock Exchange and the German Stock Exchange. But anyway, I prefer my long-term portfolio to outperform the market. But it was a negative week. It was a bad week for the overall market. The benchmark STW is actually down 2.2%. That includes dividends. Capital gain down 4.24%. So since the start of the financial year, the overall market is down because of the previous week we just had. So this is not a good start to the performance of my portfolios. However, the long-term portfolio performance has been lagging my other two portfolios. And those other two portfolios is the medium-term portfolio, which consists of smaller companies. And typically you'd think that small companies should be underperforming the larger companies. But that hasn't really happened at this point in time. I think my stock picking when it comes to these small cap companies is fairly robust and quite good. However, it was another negative week. Medium-term portfolio is down up 3.25%, but compared to the benchmark, still outperforming it by quite a bit. You might say 5% or so. Best performing companies in this portfolio is Energy One, which have already taken profits. Email Payments coming in second. Atlas Pearls keep going up 59% since I bought, and then Doug Technologies and Serata and Audinate. A few companies in this portfolio I would envisage moving those companies into my long-term portfolio, because the long-term portfolio consists of companies I want to own for the long term because I consider those companies to be high-quality companies. And Audinate, the company that's coming in number 6 in the performance of this portfolio, is definitely one of those companies that I can definitely see that company being a high-quality company. It's not quite there yet. And the last of my portfolios is the short term, which is just the technical, using a technical strategy. I already said at the start of this video that I wouldn't be talking about the strategies I use for these portfolios. However, this strategy has been outperforming my other strategies, and it is up 6.34%. And again, just like the other strategies, it was a down week because the overall market was down. Now, I keep making mistakes. And the main mistake I made in this portfolio during the week was that I had full intentions to sell out of 2 or 3 of my positions. I put sell bids into the system and they weren't hit. And I'm just thinking, if I do decide to sell a company, I should just sell on market. Don't worry about selling at a slightly higher price. Just sell on market. And if I did that, the short-term portfolio probably would be up about 7%. So I keep making mistakes. And if I can correct these mistakes, the performance of this strategy would significantly outperform not only the benchmark, but also the other 2 strategies I am using. So possibly I should become a technical trader. Now, I have made 2 purchases during the week. Dropsuite, which is a company I've owned in the past, then I sold because share price dropped a lot in one day. And then I bought back in based off their quarterly report. Now, it wasn't a perfect quarterly report, but I've just decided it's now time to get back into that company. So I'll put that company into my medium-term portfolio. I've also taken a trading position in Dicker Data, and I probably should include Dicker Data into my technical analysis part of the video. So let's actually do that. I'll put Dicker Data straight in. It's not an economy, it is DDR. So I'm very happy with this strategy, but I am learning quite rapidly, and that makes me quite excited about how I can do using a technical strategy in the future. Now onto my technical update part of the video. Typically I start with some indices, that sort of thing. So let's start with the XGO. Now, I've already talked about the XGO in my week that was video, and funnily enough, the XGO is right on the lower part of the support zone range, which is between 6,900 and 7,000. I wouldn't be surprised to see the XGO finish, or maybe not finish, but open down on Monday, which is tomorrow, because the American market was down a fair bit. Nasdaq was down 1.5%. So I fully expect the Australian markets to be down maybe about 1% on open. And then it's going to be really interesting to see how the rest of the day pans out. It wouldn't be surprised to see a fair bit of buying. And if we do see a fair bit of buying, that would be quite bullish. If we don't see buying and the market actually falls throughout the day, particularly if American futures are down, that would be fairly bearish. And the next support zone isn't actually the lows we saw back in October and June last year. It's actually, now factually, in fact, I'll go to the weekly chart for this. The next support zone for the XGO is the bottom of the trading range. And the XGO has been in the trading range since 2009. It's only gone above or below the trading range once on each side. And the first time it went below was, or the only time it went below was during the COVID-19 financial panic, which is understandable. And the only time it's got above the trading range was back in August of 2021, when there was probably peak positive sentiment in the markets. And that was actually the top of the market, top of the XGO. And it went above it for maybe a few days, not much time at all. And then it pulled back quite a bit. So that's the next support zone for the XGO. And that will be around about 65 to 6,600. And there's also another support zone around about 6,400, which is a double bottom we saw back in June and September of last year. Now, other than that, if you just look at the daily chart for the XGO, it's not in any sort of trend. You could argue it's in a short-term downtrend right now, but if we do see it bounce and goes back towards, say, 7,200 to 7,300, that would just mean this consolidation period for the XGO is just continuing. So we need more confirmation that this downtrend will continue. And I've already mentioned this, I think, in the last video. I again have heard someone say, an expert say, we're in a bull market right now. In fact, this person said we're in continuation of a bull market. It's absolutely ridiculous. And his company he works for, reasoning behind we're in a bull market is because he believes, and this company believes, interest rates will fall. And it's really bizarre, because just because interest rates are going to fall doesn't mean we're going to go into a bull market. Because one of the reasons why interest rates might fall is because governments have to lower interest rates to stimulate the economy, because we've moved into recession. And even though we have this perception that interest rates and the market goes in opposite directions, that's not always true. I've discussed this in past videos. In fact, when we go into recession, typically you see the market goes down and interest rates go down at the same time. We saw it during the GFC. That's probably one of the most famous times we've seen it. In fact, let's have a look at interest rates. This is the American interest rates. I'll just show you. We'll use a new price scale, and what I'll do is I'll turn the XGO into a line. And you'll be able to definitely see this. I'll get rid of the move these, all these signal, all these stuff. Get rid of the moving average. And we'll look at the weekly chart. You can see this definitely on the weekly chart. For some reason, trading view is going really slowly. And I can get rid of, there we go. So this goes back to 2003. So you can see, during the bull market between 2003 and 2000, or the GFC, the market, the XGO, went up significantly. At the same time, interest rates were going up. So they were positively correlated. And then when interest rates started going down in late 2007, that's when we saw the markets correct and crash. So between 2003 and 2009, interest rates in the markets were positively correlated. They both moved in the same direction. So there is this belief that if interest rates start going down, we're going to see the new bull market. And I've heard experts say that exact thing. It's not always true. It all depends on why interest rates are falling. If interest rates are falling because we've seen significant, or we're going into a significant recession, or maybe even into a depression, well, it completely changes the story. I can understand where they're coming from, but It's a bad assumptions to make to believe that as soon as interest rates start falling, we're going to see the start of a bull market. And just the fact that I've heard that a few times now, it just, particularly from experts, it bugs me a little bit. Okay, so rant ended when it comes to that, and I'll get rid of all this. So I wasn't expecting to do that. So let's have a look at the XSO. Put back in the pictures and all that beautiful, all these things I look at. So the XSO, which is the small cap or small ordinaries, this looked way bearish than the XJO, without doubt. Now, the very important level for the XSO is around about 2,600. And we saw the XSO go down to 2,600 back in June, September last year, and it's almost at that level right now, 2,628. It would not be surprising if we see 2,600 broken on Monday, which is tomorrow from when I'm recording this video. And if it breaks below 2,600, that means a small ordinaries is at a 3-year low. In fact, if you go through history, when it actually broke above 2,600 was way back. The first time I did it, actually, you might have to go back further than that. I think I have a feeling, yeah. So the XSO hasn't even got above pre-GFC levels, which was 4,100. So I was a little bit surprised by that. You see, the first time I've actually looked at this. So if you've only been buying small cap companies since about 2006 or so, you're still underwater, according to this. Of course, the makeup of the small orders does change, but it just shows you it all depends on what sort of companies you're buying into. And this is one of the reasons why I was a little bit surprised, or I should be a little bit surprised, that my medium-term portfolio is outperforming the STW, which is the larger cap companies on the ASX, which make up the XJO, and that makes me think that I'm actually pretty good at stock picking. I don't want to be braggish, but the very fact that my small cap portfolio is doing really well. I think one of the reasons behind that is what I'm looking for in small cap companies are sort of signs of potential future high quality companies. Not all of them will make it, but that's what I'm looking for in small cap companies. And I do buy quite a few small cap companies. So don't believe or don't listen to those people who say you should only have 20 to 25 companies in your portfolio. I have in my small cap portfolio something like 60 to 70 companies in that portfolio. And the reason why, they're small. They don't make up a lot. In fact, a small, minute part of the XJO. Those who say you should only buy 20, 25 companies or have 20, 25 companies in your portfolio, assume you're going to be buying top 50 ASX companies, that sort of thing. And if you do that, yeah, don't get more than 25 companies because you've already diversified. So hopefully that makes sense. A few people have told me, messaged me that I just have too many companies in my portfolio. It just depends on the makeup of your portfolio. Repeat that. How long is this video going on for? 15 minutes or so? Okay. Nasdaq, we'll look at the daily chart for Nasdaq, and this is starting to look a little bit bearish. And I don't know why TradingView is so slow now. Now, I think last time I did a video or looked at the Nasdaq, I put in this trend line, and it's behaving beautifully, the Nasdaq. So it's hit the trend line from when it starts 1, 2, 3, 4 times. And each time it hits it, it moves lower. So this is the start of a downtrend in the Nasdaq. Now, the Nasdaq would have to get below the recent lows we saw in September. So if it gets down to 14,400, that would be a sign that the Nasdaq is moving into a downtrend. Now, these sort of situations are fluid right now because it wasn't a nice uptrend, and I think there was a little bit too much exuberance in that uptrend between the start of this year and around July. The peak in the Nasdaq was the middle of July. So really interested to see what happens on Nasdaq. And again, the best performing companies in my portfolio belong in the Nasdaq. It's not absolutely true, but as a group, they're performing the best, just beating the ASX companies. Now to commodities, and I actually will stay with the daily chart. Actually, now we'll look at weekly charts. Well, let's have a look at weekly charts for all these commodities. I don't know why TradingView is going so slow. Anyway, so let's have a look at some of the weekly charts. This is iron ore. It's been very volatile since 2020. Massive peak, and just up and down, up and down. But you can see the distance between the peaks to the troughs is narrowing. Ever since the first major peak back in 2021, so the volatility is starting to decrease right now with iron ore. So that's I don't know what that means. May mean nothing, but it starts standing strong, 117.35 at the moment. So a lot of people believe, experts believe, maybe even non-experts believe, the trouble that China is having will affect iron ore prices, but we're not really seeing that just yet. Now, what is not in dispute is uranium. Uranium is in a beautiful bull market. This is within doubt. It had one down week 2 weeks ago, but it had another beautiful week last week, up 4.76%. And yeah, this is a beautiful looking chart for uranium. For those holding uranium companies, no reason to sell just yet. US oil was looking bullish. So if we had a look at the daily chart, we had that one down week here, sort of like a little buy the dip situation. And then what happened between Israel and Hamas? We saw that oil not peaked, but it rose up a few days ago, over a week ago. And that's why it's seen a nice little rally. So oil looks pretty bullish right now. And if it gets above, say, $94, particularly $96, say, that would be a confirmation of an uptrend in oil. Lithium. So lithium has been shocking for quite a few months, and it keeps going down. There's no end in sight to the lithium downtrend. So $23.90. So I think there will be a time soon when lithium companies become really interesting because of how far lithium prices have fallen. And then I think there is potential. We're going to see another bull run in lithium eventually, but there's still a little bit too much exuberance. A lot of companies that are listing on the ASX are lithium exploring companies, and quite a few of other exploring companies on the ASX, so gold exploring companies, they've decided that they want to explore for lithium. I've seen quite a few of those announcements that, we have a lithium deposit or possible lithium deposit in our gold field or whatever, or gold project. And I've seen quite a few of those announcements over the past few years anyway. Gold is beautiful. So congratulations those who held firm with gold. It had a really deep dip. When was this? At the end of September. That looked really bullish, and then a beautiful run up on gold ever since the lows we saw back on the 5th of October. In fact, gold prices have increased from probably over 10%. Yeah, about 10% from 1820 currently to 1980. This V-shaped recovery in gold is just based off, I think, the geopolitical, just political tensions we're seeing in the world right now. There are some those, and I was working yesterday and a colleague said, there are people who are saying we are moving towards World War III, and who knows? Someone compared it, one of the experts, was it Niall someone, compared it right now to the 1930s. I'm not sure, I'm no expert in history, but that is interesting. Anyway, more than likely we are going to be fine. But who knows? They said the same thing in the 1930s. What's his name? Neville Chamberlain. Just couldn't see what Hitler was trying to do. He thought peace was the best way moving forward. Anyway, with Hitler, peace was never an option. Copper is down. So Dr. Copper, this is a good proxy for the state of the economies worldwide. It's negative, and it's a really strong important support level at around about $3.56. The reason it's important is because the lows we saw back in May this year, if that's breached, we are getting new lows, and that would mean almost a 1-year low in copper prices. Let's have a look at coal. And let's not have a look at coal. It's sort of going sideways. Not a lot of interest in coal right now. Now let's have a look at bonds. So 30-year, I could have a look at the 10-year bonds. So we have a look at the American 30-year, Australian 10-year, and they're fairly similar. And the American 30-year just keeps on going up, just like the 10-year keeps on going up. In fact, the 30-year breached 5% a few days ago on Thursday, got up to 5.1%, a little bit of a retracement on the Friday, but it keeps going up. So the bond market just the bond market, you have to listen to the bond market. It doesn't mean the bond market is always right, but they're saying that inflation might be a problem, an ongoing problem, and interest rates might have to be raised again. Maybe that's what it's saying. And that same is true for the Australian 10-year. Keeps going up. So it's sort of mirroring the US 30-year. I'm keeping a very close eye on TLT, which is the 20-year, says 20-plus year Treasury bond ETF. And the reason I'm keeping an eye on this is at some point, this is going to look really interesting. And the last time the TLT was this low at 83.24 was 2006, which sort of makes sense. Really makes sense, because if you go back to the 30-year, the last time the 30-year US was above 5%, it's going to take a while. If I go to the weekly chart, just predict when was the last time, just think about the past. When was the last time the US 30-year could have been above 5%? I think I've already given it away, 2006. So let's go have a look at the weekly chart for the 30-year government bonds. Beautiful downtrend. So don't forget, bonds were in a 30-year bull cycle. So even though it's going down, bond yields and bond prices are inversely related. So even though bond yields are rising here, the TLT, which is bond prices, is going down. So the last time the 30-year US bonds were above 5% was back, actually 2007. 2007, and then the GFC, when bond yields fell all the way down to about 2.4%, and they just fell, kept on falling during the 2010s into the start of 2020s. So yeah, keep an eye on the bond yields. A lot of people thought 4.4% wouldn't be broken. It's broken, and now we're at 5%. Now onto individual companies. I'll try to do this fairly quickly because I also want to have a shower. Went for a long run this morning to the dogs before work for a 12K run. So I actually did get up at 4:30, but don't feel sorry for me because that's sort of the normal time I do get up. I am aging, and one of the signs I am aging is these days I only need 6 hours sleep. So I'm going to bed between 9 and 9:30 and waking up between 3 and 3:30. My favorite time of day is just before, say, the 15 minutes before sunrise. My favorite part of the day by far, which is weird because when I was younger in university, I never got up before 9 or 10 a.m. Used to hate having classes at 9 a.m. because who would ever get up before 9 a.m.? It's ridiculous. Now onto individual companies. Maas Group. I have done a video on this, Maas Group, and the share price of Maas Group has just broken above an important level, which was around about $3.45, which was the previous highs we saw back in May. And when the overall market's going down and an individual company share price is going up, something's good's happening. So the last 2 days, actually 3 days, Maas Group share price has risen 2.4%, 1.7%. I did drop 0.3% on Friday, but the share price has moved above a nice little support level. This could be a trading point. This could be a trade, a nice little trade. I should write it down. I do have a pen, but it has no. I should write it down. MGH possible trade. I'm just talking myself into it as we speak. I don't think. I have a feeling all the rest of the companies I'm going to show you, none of them are bullish, except, well, Karoon and GMG and Data Dicker. One that is not bullish is Transurban. So I did read something the other day that all the toll roads should be nationalised, and I sort of agree with that. In fact, I don't believe we should have toll roads. I believe, it's just me, and I just don't believe in toll roads. I don't pay tolls at all. It's not because I use tolls a lot. I never pay tolls. I don't have to use tolls, but that's the reason why I think we shouldn't have toll roads, because it targets select few people, and people like me aren't targeted at all. Anyway, so you can understand why I'm looking at Transurban now, because the share price of Transurban has been in this range ever since April, May 2020. So it's been trading as low as about $12.30 and as high as $15. And you can see whenever it gets above about $15, it pulls back. Whenever it gets to about $12.30, it goes on a run. So this is a very solid trading range. And what's happened the last week, you can just see. Share price of Transurban has just rocketed below that, the trading range. And fairly bad week for Transurban, down a fair bit. So that's what we'd call a break out of a trading range, but doesn't necessarily mean it's completely bullish or bearish, because we can see what happened in April this year. The share price went above the trading range on one day, the 26th of April, and then 3 days later it fell below. So that was a false breakout. So this could be a similar false breakout, and maybe we'll see a rally in the share price of Transurban, and it might get back above $12.30, although it is 33 cents below that level right now. Tyro Payments. The share price of this company has just nosedived over the last week or so. The company did release something. Was it a trading update? It was some sort of trading update. I'm just going to have a look. So the Australian futures are down big, 65. It wasn't a trading update. It was a investor strategy day or something. Investor strategy day presentation. So yeah, it just collapsed. And the reason why is, if you do look at the weekly chart for Tyro Payments, yeah, so we have the previous low in June of this year. Share price did get just below $1. So if it does break that low about $1 or 98 cents, that would be fairly bearish. I thought things were moving in the right direction for Tyro, but the market just didn't like this company over the past week. So share price now at 98 cents. Actually, no, the previous low was not 98 cents. It was, let me just decrease my previous low was about 94 cents. So it's moving towards that previous low, which could be a support level for this company. It could be another interesting possible trade. Smartpay, just like Tyro, now these two companies are connected. They do very similar things. So something's happened within this sector. We saw Tyro Payments share price collapse. We've just seen Smartpay share price totally collapse. I might be missing something. So if you know what's happened with Smartpay and Tyro Payments, why the share price of both these companies collapsed, and leave that your thoughts in the comment section of this video, because Smart Payments share price in the last 3 trading days fell from about $1.50 down to $1.26. Funny enough, I don't have volume here. I'm just going to put in volume. Sometimes I just have to reload the website to get volume, which is so typical of IT stuff. Just restart it and you get volume. And we should see volume for some reason. It's so slow, trading view. It's never like this. I don't know what it is. For some reason, I've started on CSL. Now we've got volume. So was there large volume? That's what I wanted to see. So with Tyro, not huge volume, but there was peak in volume on the Thursday. And Smartpay, are we seeing big volume coming in? What? Yeah. There was a couple of days of heightened volume, but not very large volume. So something must have spooked the market when it comes to these, what do you call these two companies? They have the payment system thingies. Appen, well, the reason I want to include Appen is because the share price has fallen below $1. It's 97.5 cents. Well-defined downtrend. I still own shares in this company, by the way, but no point selling because the holding is worth minuscule amount of money. So yeah, how much further can Appen fall? Market cap 153 million. Jeez. All Appen needs is one positive trading update. One sign the company's turning things around, and maybe we'll see a turnaround at play for Appen, but nothing at the moment for Appen. Kogan had a massive down day on Fridays, down 7.4%. And the share price is right on a really interesting support level at $4.65. And the reason that's a support level is you can see the share price really struggled to get above that level for a while until June this year. And then it just went on a beautiful tear and has just slowly, maybe not slowly, but has meandered down ever since then. A few big down days in that, which is a negative sign, which means there's a little bit of selling coming in. And even though it wasn't large volume on the Friday, the share price, there was enough demand or supply of shares. Share price did fall 7.4%. So possible support level for Kogan right now, but maybe because of the that's a negative 1 day candlestick. You just see the solid red body and not much of a tail or shadow on the downside. That means there wasn't any buying when not much buying when the share price fell below the support level, and the share price is right on the support level right now. Aroa Biosurgery, a company I actually did own, and then I sold. Bought around here back in November last year, and then I sold when the share price started to go down, and that was a good move. And then share price tanked, really going down quickly. The share price decrease was accelerating, and then we saw really big volume coming in like 18th of October. Share price still was down 4.4%. That might have been capitulation. That might have been shareholders seeing the share price just collapse, going, I can't stand this anymore. I'm going to have to sell. And they just rushed for the door on the 18th of October. And that could have been the end of the selling. And then the next day, what do you see? The share price rose 13.6% on an even larger volume. So possibly 66 cents is a nice little support area for this company. Would it be the worst thing to sell Aroa at 66 cents just because you just couldn't take it anymore? And then just to see the share price rally 13% on the Thursday. Platinum Management. This was a company I was interested in because the share price was staying above this nice little support area around about $1.60. So $1.60. So first hit it in July or June last year and finally fell through in August. So was staying above that support level for over 1 year. And then as soon as it fell below it on strength, on the 24th of August, when the company released their financial year results, that's a bad sign when you see a breakout to the downside of a support zone on pretty good volume, and the share price never recovered. In fact, it kept on falling. That was the day's sell, in my opinion. If not that day, the next few days, because the share price has continued to fall. $1.16. The last time the share price was this low for this company, I'm going to say never. The share price of this company has never been as low. In fact, this chart looks awful. Geez. Goes back to 2007. It was like this company listed at the worst time, just before the GFC. Share price of Platinum has been as high as $9.50. Now it's $1.15. Oof. Anyway, so even though I do have a lot of companies on my watch list, and there are things I'm looking for to take a position in that company, and Platinum is an example of a company that's on your watch list, but it never gets to the point where it's an attractive buy at all. Coles looks interesting right now because, and when I say look interesting, maybe short looks interesting on a short basis. I have never shorted a company in my life. Share price of Coles has fallen through a support area. You can see this is another company that's been trading in a range since 2020, just like Transurban. You can see definitely a range, although the bottom of the range has only been reached once before, and that was in February 2021. The share price has fallen below that range, or that lows we saw back then in the previous day. So still think this company is expensive. P/E ratio for a company that's only going to grow at 1 or 2% per year, 18.2 is still way too expensive for this type of company. But however, you could argue it's defensive, and right now it's defensive stocks you should be holding, although Coles has fallen a fair bit over the past 3 months. Karoon. So oil on an up tear. It's a beautiful uptrend. Karoon, the company I've been looking at to take a position in, and I just haven't taken a position. And when you look at the weekly chart, the share price broke out on the 28th of August week. In fact, if we look at the daily chart, you can see the breakout, and it's been tested. $2.40 has been tested 1, 2, almost 3 times ever since its breakout. You want to see it tested. You want to see some strength. And because oil prices are going up, Karoon Energy is going up as well. So it all depends on which company you like, Santos, Karoon, or Woodside. If I remember correctly, out of the 3 charts, Karoon looked the best. That's why I've included Karoon. That is one of the reasons why I was thinking about taking a position in this company. I've yet to hit the buy for Karoon Energy. Maybe I should. Maybe I should be less resistance. Just believe in myself. I've been thinking about taking a position in Karoon. Just do it. Goodman Group. Bit of hype in this company back when they released their 4-year results because they're getting into data centers, that sort of thing. And for some reason, the market just loves data centers, just loves it. And that's why the share price went on this massive run, went all the way up to almost $23.50. Share price pulled back to the breakout level, or the old resistance level, which is now support, and then went up. Share price is right now back at that support level at $21. Yeah, right on $21. So why was that a support level? Well, it was resistance. Share price got to that level in February 2023, again in June 2023, again in July 2023, and failed to get above that level. So that's resistance. Traders see resistance lines. They know that's resistance, and they're more willing, more likely to sell when the share price gets back up to that level. Sort of like a self-fulfilling prophecy, not a self-fulfilling rule, whatever. And what you want to see is that resistance broken, and typically on big volume. So when the share price rose 5.7% on the 17th, and then a further 7.3% on the 18th on massive volume, there wasn't enough traders. There wasn't enough supply of shares. So there would have been some traders who sold it when they saw the share price get up to $21, and they were aghast to see the share price up 7% the next day. And then it's really healthy to see the share price test these levels. And again, the traders know this. And traders are more likely to buy Goodman Group at a share price of $21. They know that's a support level. Now, it is concerning that the recent high was lower than the high previous to that. So there's less strength in Goodman Group. However, the market was weaker over the past few days, and that is probably why Goodman Group fell a little bit. Now to Dicker data. So I did take a position in this company because it does look like the downtrend in this share price of this company has come to an end. And you can see that if you look at the daily chart, share price of this company moved into a downtrend about May, we'll say May of 2022, well-defined downtrend, and does look at a sentiment, and the trend in the share price has shifted. So $10 is an interesting level. I'm not sure if I would sell if the share price falls below $10, but definitely $9.80, I'll become nervous. I won't sell during the day. I'll assess at the end of trading, and if it falls, say, to $9.80 and maybe even $9.75, I might think of selling out the position and taking a small loss with Dicker data. But chart looks interesting. One of the best looking. Actually, we shouldn't say that. It is a good looking chart right now when most companies' charts are in downtrends at this point in time. So that's all I've got for this video. If you have any questions about any company I've included in today's video, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.